Thank you for joining me today. This is Brian at Bitcoin Summer. Just got back from a short little jaunt up north, shutting down the cabin for the season. I'm so happy to be here with you today. I am going to jump into a few brief news updates, a few items that I wanted to talk about right off the top. I'm going to be tweaking with the show format just a little bit, and we're going to be doing smaller little digestible chunks of information and see how that works. My Node and Lightning Network tutorials are going swimmingly. All of the other stuff, not so much. I'd like to bump up those numbers a little bit and make it a little bit more streamlined, a little bit more entertaining for everyone out there. So please give me your feedback and let me know what you think. I'm going to be, obviously it's early on in the show, 20 episodes in. I'm going to just be tweaking some things, and I would really love to hear back from you, whether it's working or not, or what's working, or what you'd like to see on the show. So, and future show topics as well. If you guys got ideas, let me know. I wanted to jump off with Portugal needs foreigners like you. Obviously, Portugal economically devastated from the 2008 financial crisis, and they are definitely now trying to really attract foreigners to come. Obviously they're attracting talent. They want, higher earners and people who have entrepreneurial skills coming into the country. So what they're doing, this really caught my eye, 0% tax on foreign income, 0% tax on crypto, 0% tax on dividends, 0% tax on wealth, only a 10% pension tax, 20% freelancing tax, no minimum stay requirement. You can fast track your EU passport as well. Totally caught my eye. I've always thought Portugal is a beautiful place. Never been there myself, but would like to visit someday and perhaps relocate the family there in the future with all of these great tax benefits. Next little tidbit of news that I have here is from these two guys from Bloomberg. Have been doing some great work on the Bitcoin ETFs. So I just wanted to give an update on that since I went into great detail last episode. If you are curious about anything that I'm going to talk about here briefly, go back to that episode. I go into a deep dive on the Bitcoin ETFs. Now, November 14th is when the SEC is going to be making a decision on the Van Eck spot Bitcoin ETF. I wish we had a spot Bitcoin ETF, and I think that's coming shortly. I think that's coming by January, and I think the GBTC the trust is going to be converted into an ETF. But suffice it to say, the SEC is going to be looking at the Van Eck one first and making a decision on that. And as James Seifert points out here, he's thinking that it's going to get denied, and I totally agree with him. Now, I do disagree with these two about when they think an actual spot ETF is going to get approved. Some people are saying by mid next year, mid 2022. I think it's going to be about 3 months sooner than that, 3 to 6 months sooner than that. So we'll see who's right. Now, the reason why I believe that, again, last episode, I go all through that. Not going to go into detail now, but I just wanted everyone to be aware that we're coming up on, within the next 2 weeks here, we're going to get a decision on the Van Eck spot ETF, and I believe it's going to be denied. So whether the market takes that as negative news or not, to be seen, but if it does and there's a small sell-off or even a deep sell-off, great time to buy. Next bit of news here is in a broader sense, the macro market. Now, what's going on? Why is the market looking a little bit weak? Perhaps, it's because of the narrative coming out of the Fed. And what they've been talking about and what they've been cluing the market in on is that they are going to be tapering their economic easing. And what that means is they're going to be stopping buying a lot of their own bonds. And would be great for the economic health of the dollar in general. But, as I've explained at length on this show before, not going to happen. They can't do it. They've painted themselves into a corner. They are going to, if they do go ahead with this tapering in an extreme sense, they are going to tank the market. The market will tank. They will get spooked. They will immediately reverse course and say, no. The recovery from COVID hasn't happened as much as we want it yet. And then they're going to turn the money printers on again. So all of this taper talk is complete nonsense. Don't even just tune it out. It's not happening. If they do, it's going to be on a small scale. And just like Macroscope says here, and I want you guys to really, really, really internalize this. If it does turn out that they are going to reverse course and are going to continue printing, which I believe that they are, there's a very, very good chance that they will, or else they're going to shoot themselves in the foot. Like Macroscope says here, that will be such a positive for the market. Bitcoin will take off through the roof. And especially if this infrastructure bill gets passed, we get some even more money printing, because that money's not coming from anywhere else but money printing. So look out ahead. We are going to see some higher Bitcoin prices once the Fed is finally like, no, we're not doing this tapering, or we're going to delay it even further down the road. We're going to see a rip in everything, all asset markets. We're going to see a rip in the S&P 500. We're going to see a rip in real estate, even more than it already has, and Bitcoin is going to go absolutely ballistic. So everyone's been talking about inflation lately, hyperinflation. What's happening right now? And, you know, even the CPI, which is a bullshit metric, is clocking a very, very high inflation rate right now. And I just wanted everyone to check out this chart, because these things up top here, these things in the red, those aren't completely calculated into the CPI numbers. So when you're talking about actual inflation since 1997, these things on the upper end of this list, absolutely parabolic. And so anyone that buys college textbooks, college tuition, hospital services, anyone who has children and needs childcare, medical services, housing, food. Now, what do we talk about when we're talking about a deflationary environment? That's things like TVs, toys, software, cell phone service. All of those things, the price is dropping. But when we're talking about things that actually bring value to our lives, like childcare and education, those things have gone astronomically more expensive. And that does not pick up in inflation numbers that they try to feed you. So just keep that in mind, people. And last but not least, I am going to be doing a video, and I'm working on it right now. It's almost done. It will be out next week. I put out some bids on this Lightning pool, and I am going to be selling my liquidity to people who might need it for receiving payments or other, just people who need inbound liquidity on their Lightning nodes. Now, the way that this thread explains by Mike Levin, it's a great, great little thread here, and I'm going to be doing a tutorial on exactly this. Now, what he says is we can see an APR between 5 and 8%. So earning 5 to 8% on your Bitcoin sounds very, very awesome. So I'm super curious about doing this. That's definitely higher than a certain return that you might get from routing fees, especially on a lower end. If you're just starting to pick up fees, you're not going to be earning anywhere near 5 to 8% on your locked up Bitcoin. But apparently, selling your liquidity to people who need inbound liquidity, this might be a good way to do it. I haven't picked up a bid yet, but I have a couple asks out there, and you will see that on the video next week. I'm excited about that one. It's going to be really, really cool. So what we're going to do today is we're going to jump into a couple different conversations, and I've kind of sectioned them off into easy digestible segments. So there's going to be 3 different segments, kind of a part of the same conversation. But what I ultimately wanted to cover with this certain conversation is the idea of not your keys, not your coin. You hear this a lot. What does that mean? What happened this week? Binance, they disabled all of their crypto withdrawals. Now, if you're disabling your withdrawals, that's not a super good sign. And I've been pounding the table on these exchanges losing their available Bitcoin because people are pulling them off and putting them into cold storage. So what's happening now is they're actually delaying because they don't have enough Bitcoin to give you when you are removing it from their exchanges. They're actually telling you can't have it. And this is just a precursor to them doing this for a longer period of time. So Binance did it. I think it was just a 24-hour deal or whatever, however long it was, not even that long, maybe 12 hours. But any delay in getting your own Bitcoin back is a bad thing. So this is why I wanted to tackle these topics today with Caleb. And you've seen Caleb before on here. He is a new coiner, so he has more basic questions about Bitcoin that I kind of overlook most of the time. And so I like to bring it back to the basics, bring it back to first principles, bring it back to where we can understand it the easiest, and then build out from there. So today we're going to be talking about, making exchange purchases. How do you calculate the cost? What's the cheapest place to do it? Moving Bitcoin to cold storage. When do you do that? How do you do it economically? How do you do it without gouging and getting your Bitcoin taken away? You want to keep that percentage very, very small. And how do you do that? And also exchange risk. And I'm so glad we had this conversation because this was even before the Binance situation. So I want to explain the importance and drive this point home. Why exactly we need to pull our coin off of the exchanges. And it's because of cases like this. And this is yet again another reason why Bitcoin is on the way up. We are sitting just under 63,000 today. And we are looking very, very strong, although it's going kind of sideways. This is a great consolidation period. Great time to pick up some more Bitcoin if you haven't already this week, or even if you have. I think it's just a great time to buy because I just see it going up from here. The exchanges are running out of coins. This means that they have to find willing participants in the market to sell their coins, and that means the price goes up because nobody's willing to sell below 62, 61, 60. No one's selling at those prices right now. Not a ton of demand right now, but that's growing too. And when demand starts ripping, which Coinbase is still it's been the number one app for the last 2 weeks. I think it's mainly because of Shiba Inu. I was talking about that last week as well. But, this is a great testament to maybe there's a little bit of a delay in the market. But when retail starts trending, this price has nowhere to go because nobody's getting rid of their coins, not even miners right now. So let's jump into the episode. It's cold out there. It's November in the Midwest. In here, it's always Bitcoin summer. They price this out of the housing market. They price this out of the education market. They price this out of the stock market. They continue to price this out of day-to-day goods. We need to take this back, and this is our time to do it. Yeah, you didn't think we were going to start this soon, did you?
Me?
Yeah.
Are we live?
Yeah, we're live.
All right. I'm ready. I'm good.
Okay. Well, Caleb's joining me today, and it may look like we are long distance, but we're actually in the same room, which is awesome. We don't get to do this very often. So look at this behind the scenes look.
In the flesh.
And, we were listening to Island Boys song all day, and now we're ready to record an episode about Bitcoin. So, Caleb, why don't you fire away, and then we'll see if we come up with anything.
All right. I got a few Island Boy questions to start us off, and then we'll get into Bitcoin a little later into the episode.
Okay.
What's your favorite Island Boys song?
Well, that would be Island Boys.
Good answer. Good answer. It's my favorite one too.
All right.
All right. Well, let's get into Bitcoin.
Great.
So we're going to start off with a question related to tracking how much I'm being charged when purchasing Bitcoin. Because I think a lot of times I'm buying and I use Cash App to buy my Bitcoin.
Right.
And I'm not even sure how much like I'm being charged for the Bitcoin that I'm buying. And I'm curious if there's a technique or something I can do to track how much I am being charged when I buy my Bitcoin.
With Cash App, I've used Cash App. Actually, the first Bitcoin I bought was through Cash App. It's kind of hard to tell how much they're charging you because, you see the screen after you buy it and it doesn't say fee.
Right.
I don't think so, does it?
No, it does not.
Yeah, as far as I remember, it's just the amount of Bitcoin that you bought and then the price that you paid for it. Mm-hmm. So the easiest thing to do is to just take the amount and then divide how much Bitcoin. Well, I mean, it'll say on your receipt when it buys it, and then you just divide it and it'll show you the exact price that you paid for the Bitcoin.
Sure.
So it doesn't really matter like how many fees. The way I always look at it is it doesn't really matter with how much fees they charge you. It's how much you actually ended up paying for the Bitcoin.
Sure.
Because you're the one that matters on that end of the deal. Yeah. Like, yeah, they can make their money. Yeah, I've talked about it on the show before, and I went through why Strike is the cheapest way to do it. But when I originally suggested that you should use Cash App, it's because number one, they have the dollar cost averaging, they have the automatic payments, the auto buys. Yes. And also at the time, Strike app, you couldn't buy Bitcoin through them, and you still can't DCA, you still can't do auto buys, but they're getting better. And now you can even remove your Bitcoin off of Strike app, because that wasn't a feature at first when you could first buy Bitcoin either. So all of those things have happened now except for the DCA. So I've been using Strike just because it's basically literally free. Right. So when you're looking at the screen and it says whatever, $60,000, when you hit the button, it'll literally buy it for 60,000. There'll be a little bit of a difference because they do have to skim a little bit, and that's what's called a spread. Yeah. So to make their money, they only take like I think he was saying like 0.03 or 0.3%. It's minuscule, and it's going to trend towards 0.1%. Okay. So basically it's free is what I'm trying to say.
Into why Strike is able to pull that off while other
I've asked this so many times. I don't know how it's able to work. He was going on some podcast, and the podcaster was like, "Hey, does anyone have any questions for him on Twitter?" And that was one of my questions, was like, what's the long-term plan with not charging anything? Right. Because like, how are you, like, if I'm going to be like purchasing something through a company, like I would hope that company is going to be around for a little bit.
Well, typically it's a convenience factor, and then down the road you slowly get fees, right?
Yeah, I mean, so I think their angle, and this is all Jack Mallers, but I think, I think he's just a genius, and he was basically solely instrumental in El Salvador adopting Bitcoin, and that the only way that was going to be able to happen is through the Lightning Network, and Strike runs on top of the Lightning rails. And I think the long-term outlook for Strike, and I don't want to speak for Jack, but I think the long-term outlook isn't we're going to make money off of fees. It's we need you guys to use our app, and like millions of you fast. Mm-hmm. Because he wants it to be more of like a social payment, like more like a Cash App and more like Venmo. He's definitely gunning for those guys. Sure. And in my opinion, Venmo is almost impossible to use. Like, I use it to pay babysitters and stuff just because they have it and it's like easy. But I always try to get people to use Cash App just because number one, they're an awesome Bitcoin company. But also it's super easy to use. But Strike is almost even easier to use. I mean, I don't know if you've ever gone through like the UI on it, but it is
I just
like
recently got approved to even buy Bitcoin on it.
Yeah.
I haven't bought any on it yet because I still have my Cash App, so I just keep doing it that way. I'm comfortable with doing it.
right.
But I know you've told me in the past start using Strike, and that's why I was planning on starting. But that's where I was like, I'm not tracking.
Yeah.
I don't even see what I'm getting charged on Cash App. So it's like, out of sight, out of mind sort of thing. Where
Yeah.
I'm like just comfortable continuously
And
using Cash App when it was way more beneficial to just use Strike.
And to be honest, like, you know, and I have this whole breakdown on a previous episode, but to be honest, Cash App really doesn't charge that much either.
Mm-hmm.
And I think it comes out to be like 1.5% or maybe even 1%, like right around there. And then Coinbase is like the worst. So I rated them all.
Yeah, I vaguely remember that.
Coinbase is like 3% basically minimum. It depends on how much you're buying. But if you're only doing like a small amount, like $10 or like $50 per, you could do upwards of like, I was doing the calculations. It could be like 11% of your purchase. If you're doing, I think the $10 purchase was like 10, basically 10%. It's an insane amount. So if you're doing Strike, it's always that 0.1% or whatever he's trending down towards. And so Cash App isn't horrible on it. And back in the day when I was first getting into stocks, I had to pay per stock trade $14.95. I remember that specifically. Yeah. And that was even cheap. Those were called the discount brokers. Because back in the day when my grandpa was buying stocks, it was like $100 per trade. So like you didn't want to do a trade unless you had $100,000. You know what I mean? Because it's just skimming off of your investment.
Right.
So Robinhood revolutionized all of that. Like my brokerage now is zero, you know, and obviously Robinhood forced the hands of all of these larger online brokerages because they wanted to charge it. I remember when it went down to $5 and I was like, holy shit. Now I don't have to have, you know, you would really want to do like a minimum of like $3,000 if you're going to be paying $14 per trade.
Sure.
When it got reduced to $5, it was basically like, it would make sense economic. And I ran all of these numbers back in the day. Finally, my low end of investing was $1,000, which was way more in line with where I was at with my finances. Cause I was like, you know, I got $2,000 and I'm going to, now I have to put, you know, 1,000 into one stock and 1,000 into the other to make it worth my while. Cause if I start splitting them up, the percentage is just insane.
Yeah.
You know, that system always benefited people with money. And Robinhood leveled the playing field, which, you know, people have their own opinions about it. And yeah, you can't pull your Bitcoin off of it. So do not be buying Bitcoin on Robinhood. I'm on a waiting list right now to be able to take your Bitcoin off of Robinhood. I'm on the waiting list. You can't take it. You can't sell it. You can sell it, but you can't take it into your own possession. Exactly. And Cash App figured that out right away, that the customers wanted that you can remove it. And I remember how cool that was when I was first researching Bitcoin. I was like, oh my God, that like, you know, I didn't want to do the deep dive on what we're going to talk about with self-storage and stuff, but I also wanted to eventually be able to do that.
Right.
And so when I made my first purchase, it was Cash App because number one, it was super easy to do and I already had it. And number two, I could remove it at some point. And I did that. So that was kind of cool. And like I said, now Robinhood's talking about doing it. And that's going to force other companies, just like how Robinhood forced them, that's going to force Venmo to be able, you're going to have to eventually be able to remove your Bitcoin off of Venmo. You know, and that's a PayPal company, but you can do it through PayPal as well. So eventually you're going to be able to do that because like the market is just like, no, you have to be able to withdraw your own Bitcoin. I mean, that's just the way that it goes.
Right. When should I be transferring money to my wallet, and what sort of like transaction fees are there that I should be concerned with when moving money from, say, Cash App or Strike or wherever you have your Bitcoin to your wallet? And is there like a set amount that you think is a good amount that you should always like have at least this much Bitcoin or this much invested in Bitcoin before you're transferring it to your wallet?
Yeah, I love that question because let me pull this up really quick. And we did, we did this the last time we talked too. And actually, it's just always like a really good visual because it is the living, breathing Bitcoin, basically, and that's the mempool. And like I said, this is running off of my node, and we took a look at this last time, but this is going to be a little bit different of a discussion because now we're talking about fee considerations. Your dollar cost averaging. So each small amount, you're not going to want to pull that out and put it into your cold storage every single time because you're getting knocked on both ends. You're getting knocked on the fee end on the Bitcoin network, and you're also getting knocked on the Cash App end because you're paying them, their nut as well. So, and I talked to my brother about this as well. You're always going to want to be paying attention to this mempool because you can see your transaction fees right here. And if you had a little kitty stored away, and let's say you did 5 purchases for the past 5 weeks, and you got $500 sitting in there, seems like a good amount. Right now would be a great time to send over $500 to $1,000. Mm-hmm. The fees are the lowest you'll ever get right now.
Okay.
So nights, weekends, it's a Sunday night right now after 10 p.m. I mean, look at this, 1 sat per byte. And going through, I mean, your purchase is going to be 9 cents, basically. Like
I'm sorry, anyone can pull this up, Brian.
Yeah, you can go. So this is running off of my node.
Yeah. Okay.
But you can go to mempool.space
and get the same information.
Right. And also there's other fee calculating sites, but this is my favorite go-to because it's a great visualization.
So say that, what's a good rate then what you'd be looking for?
Well, this is the best. So 1 sat per byte, doesn't get lower than that.
Sure.
Like I said, 9 cents for your transaction. So like, I mean, that's, if you're transferring 500 or 1,000, that's minuscule. It's nothing.
Right.
But you're going to be paying the same if you sent $1 billion through the system. Right. And sometimes you will see a lot of really high. I just saw like a 1.8 million go through just now. 189,000, 560,000. Like you'll see these just kind of click through. But this is also a good time to, and we might talk about nodes later, but this is a good time to open up your Lightning channels because that's an on-chain fee every time. So when I first set up my node, Bitcoin was pumping, or it was kind of coming off of that big pump in the spring.
The big pump.
And the fees were like 60, 70 sats per byte. So 60 times at least where we're at right now. I was opening up channels. It was ridiculously expensive. My first couple of channels were so expensive. And then like literally weeks later, the mempool died out. I was like, are you kidding me? 1 sat per byte. And it's like 280 sats to open up a channel right now, which is like a quarter basically, And so these are the times that you transfer in. But sometimes, let's say we're going to be on a bull run into December. Like, let's say it just goes parabolic. We're going to start seeing this mempool explode. And you're going to see blocks out on this side just stacking up, and that's when these fees start going crazy.
Yeah, okay.
Because these are all the blocks that have been mined, and on this side these are all the ones that have yet to be mined. And as you put more and more transactions in there, you can only fill up so much space for each block. When that gets filled, it puts out another block right here. And then when that one gets filled, so
yeah, you kind of went through that.
And so
that affects the rate at which you're going to get, or the rate at what you're paying to transfer your Bitcoin.
Right. So depending on the size, it's not the size of the transaction, it's the actual like bytes that the transaction takes up that you're getting charged.
Yeah, I got you.
So the what my point is that, so let's say now you're going to be dollar cost averaging through the bull run, and you see these things spike up, you see it spike up to like 16 or 60, 70 again. Now, this last couple weeks, the mempool has been way crowded, but it only shot up to like 15, 16, 20, like right around there, sats per byte.
Sure.
And so compared to last spring, that still would be a good time to do it. Right. But let's say you're like, oh, I got this Bitcoin sitting on Cash App or sitting on wherever you're buying your Bitcoin. And all of a sudden you're like, I need to get this off. Like I need to remove this quickly. Well, a better thing to do is to just not go right in and just removing it. Just check the mempool first. If it's way out of whack with what the average rate has been for the last week, just wait till the evening or wait till the weekend.
That's exactly what I'm looking
for. And then one last caveat to that, just wait till you have a decent amount.
So when you said earlier, I think you said somewhere like between 500 to 1,000.
At this rate,
it's like you're paying 10 cents to move it. So.
If we're seeing like, God, I would say like, and I don't want to discourage you from removing it because it's the safest thing to do.
So yeah, that's kind of what I was going to get into next is like the dangers of not
right,
not doing and somewhat like security risks revolving around Bitcoin. But
yeah, I think like if I think my point was there's not really a set like minimum of what you should be transferring over.
Basically bring up the mempool, look at what.
But if it gets to like 60 again, maybe you're going to want it to be more into like 1,000, 2,000, 3,000 bucks. And I'm not discouraging you to take it off, but economically it's pretty important to not get gouged that high percentage. And that's how I always did it. But you'd be surprised though, because you can wait just a little bit, and usually you'll find a window where you can shove some coins through, and it'll be, like this. If you did a transaction right now, like your transaction, unless it got really busy, like all of a sudden, and if you only did 1 sat per byte, because you can set it like on your node, you can set like how much you're going to be paying, and you only set 1 sat per byte. A bunch of other transactions can come in before yours that are a higher priority, and you could literally, it could be sitting on chain for weeks.
Sure. Okay.
And that's what you want to avoid. But with Cash App, you don't actually, to be honest with you, they just created a choice. Before when I was first pulling off Bitcoin off of Cash App, you didn't have a choice. It was always just high priority. It was always the highest fee that you could pay. And so now they do no rush, and I think it's free, and they just put it through whenever it gets free. So, this whole conversation could have just been avoided by me just remembering that actually you can set your fees. And I think they'll pay for your transaction now if you don't do rush.
Really?
But you might be waiting. I think they said, I think the minimum you'd be waiting is like.
I should be rushing?
No.
That's what I thought.
Yeah.
Pretty sure long-term investment.
So like 20, I think it said like 24 hours the last time I did it, because I did no rush, and it was like this kind of environment. So it actually was really quick.
What's stopping someone from hacking my Bitcoin like I'm not paying attention. Like I'm asking you very basic questions. Like I could easily be getting my Bitcoin stolen from me. What's stopping someone from doing that?
What is stopping someone from doing that? So let's bring it back to let's tie it in with removing your coins from Cash App or any exchange. The reason why there was a huge push about this is it's a direct response from the Mt. Gox hack. And so when we talk about exchange risk, it means simply that people don't and shouldn't trust keeping your coins on exchanges because they're not giving you any sort of guarantee that they're going to have those coins for you. And what happened with Mt. Gox is they walked away with a ton of Bitcoin. I mean, I think in today's Bitcoin valuation, I think it was billions of dollars.
So did they technically owe a bunch of people Bitcoin and didn't have any obligation to pay them out?
Well, it got hacked, so they literally got stolen off of the exchanges. Okay. And a lot of people think, or some people think, that it was literally the guy, the CEO or whatever. Yeah. And I think he did get in trouble for it, but this is one of those things where, and a lot of people, and I agree with this, think that this is inevitable. It's going to happen again. Like Coinbase is going to get hacked and they're going to be like, I think it'd be a different circumstance because now that's a publicly traded company.
It seems probable as demand goes up that more and more people are going to be interested in how do I F the system up and gain off of it, cheat the system.
I was telling you this story today, and I'm not knocking any specific company out there, but I was talking about earning sats passively through Fold app. And there's others that do it because you can do it through BlockFi, and you can earn your credit card rewards through Bitcoin on BlockFi. And so there's all these different apps. Lolly is another one, and you can do daily sats. And I pulled my Fold app sats off the other day, and it was like, hundreds of thousands of sats. So not a ton of money, but it wasn't nothing. And I just wanted to pull it off because we're getting to this stage now where the price is shooting up. And I think these companies are going to have a harder and harder time coming up with that actual Bitcoin because they're literally having to put Bitcoin into your account. Now, imagine if they were doing fractional reserves like your bank was, and all the people tried to withdraw their Bitcoin at the same time. Or if someone went down to the local bank, or not someone, if thousands of people went down to the local bank and all at the same time they were like, I want to withdraw $10,000. They don't have it. They don't even have close to that. It's something like 5%. They borrow away 95% of all that other stuff. Not even borrow it away. They don't even have it. It's a fractional reserve system. And if these companies are using those practices anywhere near it, they're going to start getting into trouble. But that's also what runs the price up.
Yeah.
So, it was a double benefit for me to pull those sats off because not only do I know once they gets into my possession, no one ever gets them again. But at the same time, it'll run the price up because those people have to, if they don't have them already bought, they have to go out on the open market and buy it. They'll have to go to Coinbase themselves and go buy it. They have to procure it somewhere.
Right.
And if nobody's willing to sell their coin peer to peer, if they can't find Frank off the street to sell the 300,000 sats, that price goes up because you're going to have to raise it until Frank is willing to sell it.
Right.
Do you know what I mean? And so their supplier, and they sent me a nice little note and they were like, hey, the person who runs our transactions or the company, I don't know if it's a company that specializes in payment solutions. I don't know who. I didn't recognize the name, but they were saying that they had a problem with their system and they're working on it, and I'll get my sats soon, even though they sent me a confirmation. Hey, it went through on the 18th. And on the 22nd, I'm like, where is my Bitcoin? Because I didn't even find the transaction. Was another good reason why I have my node.
I was just gonna say they didn't know you had a node, and they're like, this guy's not gonna look into this.
They're like, we better get this guy's Bitcoin immediately. But this is a tiny example of exactly why you need to pull your actual Bitcoin
and what I'm gathering from this, Brian, is right now is actually a pretty good time if you're someone who's sitting on a couple thousand of Bitcoin, myself included.
Yeah.
And I haven't moved it to my wallet yet. Like, now's a pretty good time. The rate's low. And if there's ever a time that maybe some shady shit would go down, it would be right now when Bitcoin just got bumped up by 20 grand a coin. So,
because think about it, like, just like I was saying, like, if they weren't buying the Bitcoin as soon as they owed it to you, like, because when you hold a balance with an exchange, that's a debt for them. That's a liability for them, right? They don't own that. So however they want to account for that liability, that's up to them. But when it comes time to pay due, they have to have it. And so if they created that liability and you purchased it at $40,000 and they didn't buy that Bitcoin with that $40,000 that you gave them,
scrambling to try and get that to you,
and now it's worth 60 and you're trying to remove it, like, they're fucked.
Yeah, they're like,
so they have to come up with that new dollar amount. And if these companies aren't liquid, you can you might start seeing some cascading liquidations of these companies. Like, I think a lot of people were calling it in the fall too, but people were saying BlockFi is going to be done within months, and they're still running. Like, I think when you got a lot of VC money, you got a lot of venture capitalist money, you got a long runway. And that's a new company, and they just got this credit card thing bumping, and I think they're going to make a lot of money on that end, because if there are people that aren't paying their credit cards, their credit card bills off 100% every month, you're doing 15 to 20% interest payments on that thing. And so they're going to start making hand over fist. That was only unrolled a couple months ago. So they're going to have cash flow, but let's say they're just doing some shady stuff, which they possibly could be, because think about it this way. You put one Bitcoin on BlockFi and you earn, I think it's 4% now. You're earning 4% on your Bitcoin in Bitcoin. Like, how are they paying you that 4%? That's coming from somewhere.
Where are they getting where is that 4% coming from?
Exactly. Well, they're definitely making more than 4% off of that somewhere. Right. And so there's been a bunch of interviews with the CEO there, and it's basically a liquidity pool. And so what they're doing is loaning out your coins to traders on large exchanges like FTX and things like that. And so they use
small cuts off.
So when they buy on margin, they have the actual Bitcoin to back it up, and they use your Bitcoin to do that. So they're paying 10, 15, 20, 30% on their Bitcoin on their margin. And they're usually shorting Bitcoin. And so it's actively bringing the price of Bitcoin down. So what you're actually doing by lending out to these players, and I'm not, it's a capitalist system, and I'm not knocking these companies making their nut. But my point is that what you as a consumer is actually doing, because you're the product. If you're making money off of them, you're the product, and you're giving them your precious coin to literally bring the price down of. You're devaluing your coin that you're giving them by making 4% off of it. When if you weren't doing that, that thing would probably go up by 4% if you weren't doing that. That's obviously like such a simple example of it. But that's number one. Number two, when any of these companies get caught with their pants down, it's going to bring the entire market down with them for a while. That's what happened with Mt. Gox.
That's good. That's good for new coiners like me. Anyway.
Yeah.
I'm pro some of that a little bit.
I think a ton of Bitcoiners are on your playing field too. Like there are a lot of Bitcoiners that I know that actively are hoping for a cheaper Bitcoin. They want more China FUD.
It's actually very funny to watch this jump happen for someone like me, because I was like, first of all, as you all know, Brian called this almost disturbingly so, and he gave me a little tip on it too. So I did what I could, and then he was right, and it went up, and I was like, this is great. And then I was like, no, this is fucking terrible. If this could have stayed down at 40 for like the rest of the year, I would have been able to put so much.
But I've been telling you that it's not staying at 40 for the rest of the year.
I know. I'm just saying wishful thinking.
But I was just as lucky as anybody else that says a bunch of stupid shit on a podcast that I can go through and find like, oh, I made the exact call. Because when I was going back, I was like, I didn't actually call that. And I was like, and then I heard it and I was like, it was literally to the week.
Yes. The late October.
And I told you this the last time we had a conversation though. It was literally because of the ETF announcement. And everyone's like, nope, Brian, it's not going to happen. And I'm like, well, there's a good chance that it's going to happen. And when it does, immediate all-time highs. And sure shit, the same friggin' day. It was literally the day that it started trading.
Yeah.
It was new all-time highs. And so, no, I didn't predict it, but I've been hearing enough signal that I will never make a good of call as that ever again.
Well, I think I was gonna later on maybe ask for a couple more predictions. And we'll edit out the ones that don't.
I gave you a couple last episode and we'll play those once we hit them.
Did you?
Yeah.
Okay.
100,000 for sure by the end of the year.
Yeah, you did say that.
There's no doubt about it. I mean, 100,000 like it will be the low end for the end of the year. That'll be the basement.
That's disturbing to hear.
But here's the thing though, like
for a new coin.
Yeah, and I get that because when I was accumulating, and I'm always accumulating, but when I was heavily accumulating, like I was literally like selling stock and just like putting everything in. I was like, no, this is happening too quick. The price was starting to get away from me. And I was like, no. And that created like so much FOMO in my heart.
Yeah.
But we had so much time to accumulate this summer. We had so much time. Since last March. And I had time before I started buying in 2018. Like everyone always thinks they're too late.
Yeah.
You're
totally right. Cause it's like exactly like from when you first started buying, like for it to be at 40 is like outrageous. And like, that was the drop where I was like, I better stay at 40. It's like, for a lot of people it would have been like too late if you look back at it.
It's weird. It's weird how your perception changes like that though too. And I mentioned this last episode that we talked, and this, my boy Greg Foss out there always says this, but it's a rounding error where we're at right now between 60. I told you this exact thing, between 30 and 60. Who gives a shit?
Mm-hmm.
Like, I don't think, and maybe I need to be more direct about this because I always want to try to like bring a nuanced price prediction or a nuanced like a realistic view of, we could actually drop a lot.
Mm-hmm.
But maybe I need to be more clear about this with you even, is this thing's going going from 30 to 60, you haven't seen shit.
Right. No, you made that.
Like this is going to blow minds. And I don't know if it's going to happen between now and March. I don't know if it's going to happen between now and the next halving or now and the next 10 years, but it's going to happen, and it's going to even surprise me.
Yeah.
And I have to try to remain grounded, but at the same time, it's the reason why I'm so excited about this.
Sure. Well, it makes sense. Yeah. Like some of these minuscule things, like even the question regarding like rates on, it's like kind of minuscule. If you're talking about long-term investments,
right,
seeing where this whole thing's headed, like don't even worry about that. You're talking
right.
about dollars over what will be thousands of dollars that will accumulate from having and being invested long term.
Yeah, I think this is why I want to stress, and I've been stressing on this show since day one, is pull your coins off of all of your exchanges immediately, like now-ish.
Sure.
Especially with the mempool where it's at, because
well, that's something that I have not felt the urge to do from your podcast yet. I'm never like, ooh, I gotta pull my money off.
Well, good. I'm glad we're talking about it.
I'm
then
always like, ooh, I gotta buy more Bitcoin.
Yeah.
I'm never like, oh, pull it off the app.
Well, buying it is a portion of securing it.
It's the first step.
They go exactly.
The most important step.
They go hand in hand. Because it is not yours until you put it in your own cold storage.
Yeah. And that's a good mentality to have, because I don't think I think I kind of knew that, and that's kind of why I wanted to ask that question, is because I knew that like there's some risk to just having it sitting in this app. And like long time ago, I had Bitcoin not knowing anything about it and not caring about it, and I had a little like Bitcoin wallet app, and I just forgot my password and just ignored it. And it was like, that Bitcoin's lost, don't care, didn't care back then, foolish. But so now that I'm accumulating more and more, it's like, is this safe sitting here on Cash App? Do I know that when I transfer to my wallet, am I going to get a huge fee? Am I going to get what actually says that I have? Like, I don't know. Can you trust that?
I mean,
I don't have that much trust in other companies controlling the money,
and you shouldn't.
It's just like the same with Robinhood. And when I have stocks on Robinhood, and I'm like, I see stuff go down with GameStop, and I got had by that a little bit. And I was like, yikes, dude, I don't trust any of these apps.
I mean, the level. Okay, so this is a good way to look at it. Like the level of money that these companies have, like your couple $1,000s worth of anything on any of these, on Robinhood or Cash, like it doesn't matter to them. So, but that scares me even more, because think about it this way. So you go into Robinhood and you buy 100 shares of GameStop. They don't have to go and buy those shares. They literally can just tell you that you have those shares.
Seems like it should be illegal to do such a thing.
But it's a brokerage. Like they can run on margin. I'm sure there's who knows with Robinhood, because they've been getting away with shit, and they're tied in with like SEC and stuff. So like it's shady. It's pretty shady. But like, think about it though. Like some dipshits buying 100 shares of GameStop, and they don't want to buy it. They don't have to. When you sell it, they just give you that cash. If they don't find it economically feasible to be buying it. And what Robinhood is actually doing, and a lot of people don't know this, but their business model isn't you buying stocks off of their app.
You giving them money, them doing whatever they want, and them returning the money that they say that they'll return to you. Correct?
No, actually, well, they do a little bit of that, but actually where they make
feels like
where they make their money is they sell information. They sell your trading information to hedge funds. So
it's a little darker, actually. Shadier.
And they're fully upfront about it, but it's a information. And so they know where the trade is heading. So let's say like,
so they can see the market where it will go before it happens, and they won't even have to buy what they said that you're buying.
The same thing happens with Bitcoin. So let's say let's say a I guess we got drag racing going on outside. Let's say a large hedge fund wants to buy 1 million shares of GameStop. I don't know why I keep using GameStop, but
It's everyone's favorite stock.
Okay, so let's say a hedge fund wants to buy 1 million shares. Let's say Podunk, you and me have 100 each sitting on our account, but we're trading. So we have a stop limit at, let's say, I don't even know what the price is at. So let's say the price is at 100, but we have our stop limit at 90 because like we want to protect ourselves. This is what happens with Bitcoin all the time too, by the way. So just think of it as a parallel to manipulated markets. So these hedge funds now know that your stop loss and my stop loss is at 90, and there's 1,000 other people like that.
Yeah.
And what do? They bid GameStop all the way to 90. They eat up all of those stop losses, artificially bring that price down, and then guess what happens? They bought it at 90 because they knew you were gonna sell it at 90, because you're like, if I don't sell it at 90 and it keeps going down, I'm fucked and I can't like put food on the table tonight.
That's how we do it. We buy GameStop to put.
It was manipulated down. So what happens? It gets bid right back up to the 100. They sell. They made $10 per share off of 1 million shares, and they do it rinse and repeat. That happens all day, every single day. And these Wall Street bet guys think that they're the ones that are like manipulating the market and getting the better of these people. 1% of those people are getting the better of the hedge funds. The 99% are getting chewed up and spit out. And that's what happens in Bitcoin when people overlever. People are on these FTX exchanges, and they're going in and they're doing 20x leverage on a long position. The hedge funds can see that because it's a free and open market, and you can see it on a ledger, and you can see it on these exchanges, and those exchanges sell that information just like Robinhood does to these hedge funds, and they see all of your stop losses and they make it hit it, and that's why you see this price go up to this exact level. Yeah. And then you see it go back down, and the same goes the other way. It goes all the way down to this level, and then it goes all the way back up because they're accumulating. And they're accumulating cheaper than you are because you're doing it the wrong way.
Yeah. Well, they have the information that you don't have.
Exactly. It's always stacked towards the people who already have the power and the money. But there's an easy way out from that. Buy Bitcoin and hold it. You don't need to use leverage. You don't need to put yourself into that position, and then you pull it off of the exchanges, and they don't get to do that shit to you or other people. But people keep having that I'm going to get rich tomorrow thing. And we got to get back into the mindset of I'm going to be rich in 10 years because I'm going to be patient. I'm going to be more patient than any of these other people out there.
Well, if I did want to get rich tomorrow, what would you say? What should I do? Exactly. How would you get rich tomorrow?
I don't know. I'd try to buy like, that info from
buy information from
Robinhood and
buy that information. All right. So there's no getting rich. Got it.
Not easily.
Okay. What if I told you I started selling all my Bitcoin?
I would say it's not
make a quick buck here and there.
I would say it's not a good move. I would not suggest it. Is that what you've been doing?
I sold a few. I started investing in testnet coins. I don't know if you're familiar with
testnet.
Yeah, it's lucrative.
What is it? Okay, maybe I should look into it. I didn't hear about that one.
Know about testnet coins?
No.
I guess I know a little bit more than you do.
Yeah. Have you heard about the new WorldCoin?
WorldCoin.
It's a new coin.
No, I have not.
Oh man, it sounds more scammy than any other coin I've heard of recently. And
I mean, it sounds like it'll work globally though.
Yeah, it does. I think the craziest part about WorldCoin is it's not a good idea.
Well, you didn't explain yourself. It sounds like something I could buy an Island Boy record with.
Yeah,
free.
Actually, I think they're taking WorldCoin.
They're taking WorldCoin.
No, apparently they're gonna. WorldCoin is meant. It's gonna be evenly distributed across everybody in the world.
Oh, sounds fair. Communist.
Comunistas. Yeah, it's a horrible idea. There's gonna be winners and losers in this Bitcoin economy, but what I like about it is that the losers are going to be the ones that have been fighting the idea that possibly we could have a new monetary system and kind of iron out a lot of these inconsistencies with the people at the top. And my favorite aspect of Bitcoin is when you start fixing the money, you start realigning the incentives for people. And when incentives are misaligned, you get musical groups like the Island Boys. And
which we want more of.
I mean, that's peak fiat, those guys with the face tattoos, like I'm not knocking face tattoos, but man, whoo, holy shit.